The battle for the 20-day line is on. Shiba Inu is fighting for its short-term future. After a brief surge, the token has retreated, finding itself pinned against a critical technical barrier, the middle Bollinger Band. This is not just a line on a chart, it is the line between consolidation and a potential crash. We analyze the volatility squeeze, the massive drop in speculative interest, and the exact price point that will determine the next explosive move for Shiba Inu. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you, if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The current price action for Shiba Inu is characterized by a high-stakes technical standoff. Following a volatile start to January 2026, the token has entered a period of tight consolidation, currently trading in the range of 849 to 899 units. This tight range is being closely monitored using the Bollinger Bands, a volatility envelope that provides dynamic support and resistance levels. The bands are currently signaling a significant cooling phase after the prior surge that briefly pushed the price toward 1,000 units. The token's market capitalization remains robust at approximately $5.01 billion, but the focus has shifted entirely to the short-term technical structure. Traders are keenly aware that when volatility compresses, a massive expansion is often imminent. The question is not if a move is coming, but when and in which direction. This technical pressure cooker sets the stage for the most critical price action Shiba Inu has seen this month. The central event is Shiba Inu's current struggle to maintain position above the middle Bollinger Band, which also serves as the 20-day simple moving average. According to reports, this critical support level is currently positioned at 825 units. The token has experienced a 2.3% decline over the last 24 hours, pushing it dangerously close to this equilibrium zone. Holding above the 20-day simple moving average is paramount for maintaining a bullish market structure. A close below it would signal a loss of short-term momentum and could trigger a cascade of selling pressure. Conversely, the upper Bollinger Band, acting as the immediate resistance, sits at 971 units. The price is currently caught between these two bands, with the 825 unit level representing the last line of defense for the bulls, before a deeper correction becomes likely. This technical battle is the single most important factor dictating trader behavior today. The market reaction to this technical squeeze has been one of clear underperformance and reduced speculative appetite. Over the past 24 hours, Shiba Inu has fallen 2.3% against the dollar, but its relative performance against major cryptocurrencies is even more telling. As per data, Shiba Inu has underperformed Bitcoin by 3.6% and Ethereum by 2.1%, suggesting that capital is rotating out of the meme coin sector and into larger, more stable assets. This lack of relative strength is a direct consequence of the volatility compression. Analysts note that the market is waiting for a clear signal from the Bollinger Bands before committing new capital. The price action is currently dominated by short-term traders attempting to scalp profits within the narrowing range, while long-term holders remain on the sidelines, waiting for the decisive break above 971 units, or a clear capitulation below 825 units. The current market is defined by caution, with traders prioritizing risk management over aggressive positioning. The technical consolidation is mirrored by a significant drop in speculative interest, as evidenced by the decline in open interest. Open interest, which measures the total number of outstanding derivative contracts, is a key indicator of speculative activity. According to reports, Shiba Inu's open interest has fallen sharply from its peak of $145 million earlier this month to its current level of $104.29 million. This represents a substantial 28% drop in speculative positioning. Analysts note that this decline suggests a mass exodus of short-term, leveraged traders who were betting on a quick continuation of the January rally. While this reduces the risk of a sudden, forced liquidation event, it also signals a lack of confidence in the immediate upside. Furthermore, despite the price consolidation, on-chain data shows that the burn rate remains volatile. A recent spike saw 4.3 million tokens removed from circulation, a 910% jump. But this deflationary effort has not been enough to counteract the prevailing technical pressure and the drop in speculative demand. Expert analysis of the Bollinger Bands points to a classic volatility squeeze. The bands, which had widened during the prior surge, are now beginning to compress, a phenomenon confirmed by the declining average true range. This compression is a strong indication that the market is building energy for a major move. Historically, periods of low volatility are followed by periods of high volatility. The current price action, trading just above the 20-day simple moving average at 825 units, is the fulcrum of this potential move. If the price successfully holds this support out and breaks the upper Bollinger Band at 971 units, the measured move from the volatility squeeze could project the price toward the 1,150 units mark. However, if the support at 825 units fails, the lack of speculative interest could allow the price to quickly drop to the next major support zone, potentially retesting the 790 units level. The key takeaway is that the technical structure is nearing its breaking point, and the resolution of this squeeze will define the short-term trend. The Shib Army community is intensely focused on the technical charts, with the 825 unit level becoming the new rallying cry across social media platforms. Traders are sharing charts, highlighting the importance of the middle Bollinger Band. The sentiment is mixed. While long-term holders remain optimistic about the utility of the Shibarium Layer 2 network, short-term traders are expressing anxiety over the declining open interest and the recent price dip. Developer hints continue to focus on ecosystem expansion, but these long-term developments are currently overshadowed by the immediate technical risk. Community-driven efforts, such as tracking the burn rate, provide a morale boost, but the market is clearly being driven by technical indicators rather than pure sentiment. Analysts note that a decisive move in either direction will be required to unify the community's focus, either by confirming a bullish breakout or by forcing a capitulation that clears out weak hands. Short term, 1 month. The immediate forecast is dominated by the Bollinger Band squeeze. Analysts predict a high volatility event within the next 2 weeks. The bullish scenario requires a close above the upper Bollinger Band at 971 units, which would target a move toward 1,150 units. This represents a potential upside of approximately 37% from the current price. The bearish scenario, which is equally likely given the current underperformance, involves a decisive break and close below the middle Bollinger Band at 825 units. Should this occur, the price is expected to quickly test the 790 units support, with a worst-case scenario seeing a slide towards 680 units. The short-term outlook is a coin flip, entirely dependent on which side of the Bollinger Band envelope the price breaks. Long-term, 3 years. The long-term outlook remains decoupled from the short-term technical noise. Analysts note that the token's ability to reach the 2,500 units mark by the end of 2028 is contingent on the successful, sustained adoption of Shibarium. The volatility squeeze is a short-term market phenomenon, while the long-term value is derived from utility and deflationary mechanics. If the ecosystem successfully drives a consistent massive burn rate, the long-term supply shock will eventually override short-term technical patterns. However, until that utility is fully realized, the price will continue to be subject to these technical pressures. The primary risk is the volatility squeeze resolving downward. Analysts note that the combination of a declining open interest and a failure to hold the 825 unit support could lead to a rapid, sharp decline. The low open interest means that fewer leveraged positions are waiting to be liquidated, which can sometimes lead to a dead cat bounce failure. Furthermore, the underperformance against Bitcoin and Ethereum suggests that if the broader market corrects, Shiba Inu will likely suffer disproportionately. Neutral insights emphasize that the Bollinger Band is a reactive indicator, not a predictive one. While it signals an imminent move, it does not guarantee the direction. Traders are advised to set tight stop-loss orders just below the 825 unit support to manage the risk of a sudden breakdown. The current environment demands patience and strict adherence to technical levels, as the market is offering no clear directional bias. The charts are screaming that a major move is imminent, but the direction remains shrouded in technical fog. Shiba Inu is currently walking a tightrope, with the 825 unit support acting as the thin line between a massive breakout and a painful correction. The volatility squeeze is tightening, and the open interest is thinning out. The next few days will be historic. Keep your eyes glued to the middle Bollinger Band. The next chapter in the Shiba Inu story is about to be written. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.